Hi everyone, this is Tim Melvin of the Tim Melvin Deep Value Report and the Banking on Profits newsletter, coming to you from yet another sultry day down here in Central Florida. Once again, it'll be in the high 90s with high humidity. Ordinarily, I love that stuff, but I have to say over the past weekend, our air conditioner went out Sunday afternoon. So the last 2 days, not a whole ton of fun. Fortunately, we have two units, one upstairs and one downstairs, so it didn't get as horrific as it might have, but it still wasn't a lot of fun living without an air conditioner there for a couple days. Now, again, the weekend video went into Tuesday. Then, surprise, here's Wednesday, so we're just going to call this the video that we will most of the time get to use sometime during the week. It's a great weekend around here. A bunch of new books out. Finished the new Billy Martin biography, which, look, if you're a Yankees fan, a baseball fan, or a Billy Martin fan, must-read book. It's phenomenal. Nelson DeMille had a new novel out, so I found it necessary to spend a little quality time finishing that one up, too. Getting into summer reading season, guys, and the stuff that's coming out right now is just phenomenal. So combine all that with normal activities around this house, and I'm a little late with the video again this week. So looking at the week, over the last week, the S&P 500 is up about 32 basis points. The URTH All World Index is up 0.19%. Leading the way, once again, is the QABA, the Community Bank Index, up 1.72% over the past week. Now, as you may recall, last week we talked and wrote about the 4 ways to get rich in the stock market, and 2 of those were value and momentum stocks, both approaches that have been very successful over long periods of time at building wealth in the stock market. Now, somebody asked me over the weekend, hey, can't you combine those? And the answer, of course, is yes. Cliff Asness, LSV Asset Management, Brandis, and some others have done some neat work on that, where you take stocks with value characteristics, you rank them by momentum and buy the best performing ones over a certain look-back period. I did that this weekend out of curiosity. It got the best of me. So I just ran a list of all stocks under book value in the U.S., no safety filters, no balance sheet filters, no nothing. Just trading below book value, and I added a momentum filter. What I found was there were 2 groups that absolutely dominated the list. One was energy stocks, your oil and gas related stocks. That's to be expected. We have seen a nice bounce in many energy names over the last 3 or 4 months as the commodity has stabilized and even moved a little higher. Now, the future for those stocks is going to be very much determined by the price of that underlying commodity. So if T. Boone Pickens is right and oil goes up to $70 this year and maybe $80 to $90 this year, they're going to do extraordinarily well in a very short period of time. Even Stanley Druckenmiller said that he thought oil was an interesting trade over the next year. So if those 2 guys are right, then short-term energy stocks are going to do great. We're going to be happy about that. Even after adding our very strict safety filters and kicking some out after we modified the filters earlier this year, we still have a pretty good exposure to safe and cheap energy stocks. So if they go higher sooner, you're not going to hear me complain very much. Now, OPEC and Goldman Sachs, they're both saying, no, guys, oil's going lower. OPEC says that, we may never see $100 a barrel oil, but they may be talking their book just a little bit there, guys. But Goldman issued a report, and they said they think $45 is the number. So if they're right, our gains are going to be delayed a little bit. We're going to own these stocks for several years, and that's fine with us. We buy stocks with time frame of when it works. Eventually, capacity is going to come offline. There's still, although very slow, you've got population and economic growth that will drive oil demand at some point in time, and you'll get a rise in oil prices that allow these companies to make a lot of money and see the stock price a lot higher. Whether it happens next year, the year after, I don't really care. The key there is that over time, we make a lot of money with our energy stocks. Now, you know where I'm going with this, right? The other group on the list is community banks. Small community banks had a monster first quarter across the board. They way outperformed their peers. You saw rising earnings, very strong earnings growth as credit conditions continued to improve. Those that specialized in commercial and business-oriented lending saw strong loan demand pickups as they were able to get really focused in their communities and deal with the folks that are expanding their businesses, buying owner-occupied commercial real estate and that type of thing. Had a great quarter. Lots of increased dividends. New stock buybacks have been announced, just kind of all over the industry group. So these stocks are doing very well right now. They've got price momentum. Many of them still trade way under book value. So now I got a little curious after doing that. I said, let's put this in to I told you about this last week, Louis Navalier's tool, the portfolio grader, that ranks stocks on various growth-oriented fundamentals as well as that quantitative momentum aspect. Well, when we dumped that list of 500 stocks into Portfolio Grader, it became a list of community bank stocks for the most part. Okay, community banks, the smaller ones now, $1 billion and under is pretty much, I'm going to say, probably you get better as you get smaller. Under 500 million of total assets is the real sweet spot for these things. Conditions are great, earnings are growing, revenues are up, they're buying back stock, they're raising dividends, and they've got price momentum, but they're still trading below book value, so there's still lots of time to get into this trade and lots of time ahead for these stocks to become compounding growth stock winners in spite of buying the value prices. In fact, when I look at the community banks, when I buy a bank, there's really, in my opinion, barring a complete economic and credit collapse worse than 2008, only two things can happen. One, this little bank comes up with a plan. They deal with rising regulatory costs. They're able to implement all of the Dodd-Frank measures and deal with the need for technology upgrades to please millennial customers and deal with cybersecurity and all the issues that the smaller banks are facing. They find a way to deal with that through a combination of local knowledge and just superior customer service. They take market share away from their larger competitors, and they grow revenues and earnings at a very high rate. Guys, I'm not going to be unhappy if I own a stock that does that and it doesn't get taken over in the next year or two. That's a compounding machine where you can earn very high rates of return for a very long period of time just by practicing what Charlie Munger calls sit on your ass investing. You sit there, let it grow, let them buy back stock, raise the dividend, reinvest the dividend if that option is in fact available to you, and watch your money grow by a spectacular amount over the next decade or so. Now, the other alternative is, and this is where exhausted board plays into it, you've got a good bunch of guys who had great careers as bankers in the last 6 years have been hard. Everybody hates them. The regulators hate them. The customers hate them. The people they lent money to and had to foreclose on hate them. The people they won't lend money to because of tougher credit restrictions won't. They're not very fond of them either. So nobody likes the bankers except their family, and their family's not always sure either because having an aggravated parent or spouse in the house because of the difficulties of their job is just not fun. All this stuff, we joke about it. When I talk to bankers, it's very, very real. So finally, one day they all get in the boardroom and they say, guys, I'm an exhausted banker. I'm sick of this. So let's vote now to sell this bank. Let's get a premium to 1.35 times book value. Maybe we can do a little bit better, but that looks pretty good to me right now. That puts my IRA back in the black. The ESOP's going to go up, quite a bit in value if we get a good price for this bank. Our 401ks will repair, and we can just walk away from what in our perspective is now a horrible business. We'll sell the bank. We'll move on with our lives. That happens, hey, we're paying 85% of book value, guys. If this gets taken over at the current multiple of 1.35, we've made quite a bit of money in a reasonably short period of time. So that happens in the next year too. Well, I'm pretty thrilled with that too. There's a lot of win-win scenarios in the small bank stocks right now. They have price momentum, but there is still time to get involved, and you absolutely should be involved. Now, the other day, it was interesting. I was flipping through the monthly deep value letter, not the Banking on Profits letter, just looking back over performance of some of the stocks that we highlighted in the various screens in that monthly newsletter. And it's been pretty solid. There's just been some huge winners from things like the double cheap stock screen and the stocks under book value with high F&Z scores. There's been some fantastic winners in there. But I did notice that a lot of those screens did have a huge bank presence, particularly the insider buying screen from late last year and early this year. So I got curious again. So I ran the screen right before I sat down to do the video, and here's what I found. Not only am I still very, very confident that there's lots of money to be made in the community banks, so are the insiders, the folks running the institutions. Now, insider buying has been kind of topping out as the market moves higher, but we had about 50 stocks total in the banking sector, the community banking sector, with insider buying. 32 of those were insider buys at less than book value. That's a whole stock portfolio right there. If you're using 3% positions or you're 2% positions, you're about 60% invested right off the bat. Just buying bank stocks that have recent insider buying. So still plenty of cheap stocks. I think they're cheap. Folks running the banks think they're cheap. The activists definitely think they're cheap because we're still seeing very steady 13D issuance. In fact, this is going to be the 13F issue of the monthly Banking on Profits for June. So you'll be able to see what all of our little bank specialists and activists, the ones that we like to track and pay close attention to, have been doing so far this year, what they've been buying. We know from the Stern Agee report that when you get one of these little banks where there's an activist with a 5% or more position, the odds of outperformance are pretty substantial, and the outperformance is huge. Remember, it was a 28% outperformance over the banking indexes, which had returned 17% on their own during the period of activist involvement. So you have returns north of 40% once an activist got involved in this bank until they exited the trade. So the activists are buying, the insiders are buying, I am buying. You are absolutely crazy if you are not buying with a portion of your long-term money. You're going to look back as this as one of the biggest lost opportunities of your investing career. So anyway, we're going to keep it to banks this week. Not really need to go any further because that's really what's happening right now in the stock market. Everything else is just kind of trending along. The central bank is the only thing that really matters. If they raise rates, most stocks will go down. Community bankers will throw a party because then interest margins will widen up. So anyway, that's all I've got from you down here in Central Florida. We're getting ready to go into a season of the Winter Garden Squeeze baseball. There's the Florida's baseball summer league team down here. They play with wood bats. We're hosting one of the players from El Paso this year. Really excited about it. Season kind of kicks off tonight with a Meet the Players event. Can't wait to go and attend that this year. So anyway, next week you'll get a video. It could be this weekend. It could be one day next week. But I will get you a video at some point during the week. So this is Tim Melvin with your sometime in the next week video for this week. And I'll talk to you guys next week. Thanks for watching.